Thank you for joining me this Friday, the 21st of October. I'm Grady a market analyst with Bell Direct, and this is the weekly market update. A long-awaited four-day green run started the week on a high note across global markets as investor sentiment was boosted by stronger than expected earnings results out of a number of companies in the US, including the Bank of America and JP Chase. The rally came to an end on Wednesday though, as US Treasury yields soared to multi-year highs, overshadowing strong earnings reports out of United Airlines and Netflix, amid concerns that the Fed will continue to aggressively hike interest rates for months to come. Recession fears also increased in the UK and Europe after UK inflation data for September spiked to 10.1%, from a surprise decline in August. Sentiment remains low as investors bounce between concerns of high inflation and concerns of a recession. And locally, we are seeing companies release trading updates that were mixed this week, with many lowering production outlook or performance guidance based on La Nina weather events that are set to hit Australia's east coast this summer, which in turn has caused investors to sharply sell off such weather-impacted shares across a number of sectors. BHP shares fell more than 1% on Wednesday after the mining giant reported production results that fell short of analysts' expectations, with copper production down 11% on the June quarter, iron ore down 1%, metallurgic coal down 19%, energy coal down 3%, and nickel was the only one up 10% from the prior quarter. Metallurgic coal was lower due to significant wet weather in the quarter, according to the company's report. Whitehaven Coal, the 2022 favourite stock, was sharply sold off in the opening hour of trade on Wednesday as investors saw production outlook decline for the coming months. However, the share price rebounded as investors took a closer look into the quarterly trading report to see the company made $1.5 billion in cash in the September quarter, benefiting from that global energy crisis that is not set to end anytime soon. The company also noted labour shortages along with weather events led to the decline in coal production output. Costa Group is dealing with citrus quality issues over this harvest season, with pack-out rates expected to come in at 20% below budget amid lower average pricing outcomes and higher costs. Bell Potter maintains a buy rating on Costa Group though, as the current weather damage on crops is believed to be seasonal rather than structural over the long term. So what does this mean for you and your portfolio? Well, when making investment decisions in the current market for the months ahead, be sure to factor in the company outlook and impact weather events are expected to have on production, then guidance on earnings. Locally, the ASX rallied to start the week, however, it was not enough to offset the late, sharp sell-off that ended the week on the back of UK inflation data and US interest rate hike fears. Real estate stocks jumped 1.69% for the week, financial services stocks added 1.24%, and communication services stocks lifted 0.52% from Monday to Thursday. Materials stocks took the biggest hit of the week, with the sector falling 2.7% over the 4 days. The winning stocks of the week were led by Novonix, which surged 26.67% after the battery materials and technology company was selected to enter negotiations to receive a funding grant from the US Department of Energy to expand domestic production of high-performance synthetic graphite anode materials in the US to keep up with surging demand and mounting pressure to bring operations of these critical industries onshore. Core lithium jumped 15.15% this week amid the strengthening price of lithium in recent weeks to an all-time high that ended last week. And Liontown Resources rose 12.54% over the 4 days to Thursday. On the losing end, it was St Barbara that took the biggest hit this week, falling just shy of 37% after the gold miner released a first quarter trading update outlining production at the company's Gwalia mine was impacted by equipment availability. Taking a look at the Ore Lords, Syra Resources jumped 20.93% from Monday to Thursday this week after the graphite producer announced it has been selected by the US Department of Energy as a recipient of the bipartisan Infrastructure Law Battery Materials Processing and Battery Manufacturing Grant of up to $220 million, while Megaport and Atomos each tumbled more than 24% and 20% respectively. The most traded stocks by Bell Direct clients from Monday to Thursday were News Corporation, Xero, 29 Metals, Lake Resources, BHP and Pilbara Minerals. Investors also bought into St Barbara and New Hope Corporation while taking profits from Westpac, Banking Corp and Whitehaven Coal. And the most traded ETFs this week were BetaShares Australian Strong Bear Hedge Fund, BetaShares Geared Australian Equity Hedge Fund and iShares S&P 500 ETF. Looking at the release of economic data next week, China's GDP growth rate for Q3 is out on Monday, with the market expecting the world's second largest economy to increase from 0.4% in Q2 to 3.4% in Q3. Aussie investors will be keeping a close eye on the release of Australia's inflation rate data for Q3, which is out on Wednesday, with the market expecting inflation to surge to 6.9% for the quarter from 6.1% in Q2. And annualised US GDP growth rate data for Q3 is out on Thursday night, with the market expecting a rise to 2% from a decline of 0.6% for Q2. And that's all we have time for today. I'm Grady Wolf with Bell Direct. Have a lovely Friday, enjoy your weekend, and as always, happy investing.